Leading off our presentations is everyone's favorite economist, Dr. Vinod Agarwal. Dr. Agarwal is Deputy Director of the Dragas Center for Economic Analysis and Policy in ODU's Strome College of Business and a Professor of Economics at Old Dominion University. Dr. Agarwal, the stage is yours.
Thank you, Larry. And thank you for all of you for coming to this market review and listening to my talk. Let's start the show by showing you that we are somewhat optimistic this year. As you can see, this arrow is only going up. Let me start off by looking at overall economic activity in Hampton Roads as measured by nominal GDP, not adjusted for prices. As you can see, Hampton Roads nominal GDP in 2019 will exceed $100 billion. What does that mean? If Hampton Roads were to be a country, we will rank in the top 70 nations in the world. So the idea of the chart is to show you that we are not a very small economy. We are quite a large economy. However, as economists often look at, we don't look at nominal GDP, but we look at real GDP. If you look at this red line, you'll find the following. We see a growth the first few years in this chart, then stagnant, and then a small growth again. Let's dive into it just a little bit more. From 2003 to 2006, Hampton Roads' economy grew on an annual basis about 4.5%, exceeded national economic growth. However, from 2006 to 16, our economy actually grew at a negative 0.15% on an annual basis, when the national economy was growing slowly but had a positive growth. The reasons for this are essentially three: sequestration, Great Recession, and lack of private jobs. I'll dwell into those things very shortly. Going forward, beginning with 2017, 18, and 19, we see for the first time in a few years, 3 years of consecutive growth. We actually expect growth in 2019 to be slightly at a faster pace than in 2018. This chart shows you nominal DoD spending in Hampton Roads. According to our estimates, 40% of our economic activity in Hampton Roads can be traced directly and indirectly to DoD spending. From 2000 to 2012, DoD spending increased in Hampton Roads by about 6% on an annual basis. But from 2012 to 16, it actually declined or remained stagnant. Good news, however, is defense spending has begun to increase. As you can see in this chart, defense spending in 2019 is expected to be about 11% higher than what it was in 2017. And if you follow President's proposed budget for next year, defense spending nationally is expected to increase, if Congress passes the bill, by another 5%. So therefore, we expect defense spending to continue to increase in Hampton Roads. And this is one of the reasons we are somewhat optimistic about Hampton Roads' economy. Another way of looking at this is, look at the size of the military and the size of the federal civilian force in this area. Since 2003, active duty personnel actually have been slowly declining. However, some of the decline has been compensated by federal employees. However, if you look at these numbers, you'll find the following. From 2003 to 2017, federal presence has declined by about 20,000 employees. Why is this important? If you look at this chart here, it shows you average compensation received by federal employees, by military personnel, and by private non-farm workers. What is interesting here is, if you lose one job, the federal sector or in the military, we need to create about 2.4 jobs to compensate for the economic loss. And private sector simply has not been able to fill this gap. So, by the way, I must tell you that the next set of charts are going to be all positive news. If you look at the labor market, there are several indicators. I'll talk about 3 of these today. They're all going in the right directions. Look at the Great Recession, first of all. From 2007 to 2010, Great Recession cost this area about 38,000 jobs. Since that time, we have been gaining jobs, but it took us almost 10 years to get back to the level we had in 2007. The revised numbers, which were released yesterday, show that the economy actually had a significant number of job growth in 17 and 18, and we expect this growth to continue in 19. Another measure of employment comes from a data source called quarterly covered employment wages. This data set covers all those employees who was covered under unemployment insurance. From first quarter 17 to first quarter 18, this data shows the number of jobs increased by 11,000. However, the wages increased by only 1.8%. But the good news, however, is jobs have been increasing. Finally, let's look at unemployment rates. As I've been saying before, unemployment rate by itself is a meaningless entity. We must pay attention to not only what is happening to unemployment rate, but also pay attention to what is happening to the size of the labor force. From November 2009 to December 2018, labor force in Hampton Roads increased by slightly more than 40,000. Number of people employed increased by over 70,000, resulting in a lower unemployment rate. That really is a very good news. But keep in mind that when nationally or locally we reach below full employment level of about 4%, private firms and businesses have a problem. They are labor shortages. We need to find the right labor at the right time, and we expect that this will lead to a pressure on wages to increase. In summary, we expect the economy to grow nicely for the next couple of years, but only due to expected increase in defense spending. For this area to grow at a moderate pace for all times, we need to develop a thought of thinking of that this area is a regional economy, not comprised of just 17 cities and counties, but together. Until we start collaborating on a regional basis, we are going to continue to grow at a slower pace than the nation. Thank you.
Thank you, Dr. Agarwal.